Welcome to TradeNBI.com. This is Jonas. Report is for the 5th of September. Well, hopefully everyone had a wonderful Labor Day, and the action will now start in earnest post summer break. From a bull standpoint, it's getting a little bit soft here. We had this peak move here prior to, and of course you've got new fund money coming in, so that should be interesting to see how it gets applied there. Of course, now the battle is between yield from Treasury versus the market, and who will have the strongest play. At this particular stage, we've got Magenta moving close to that 33 line. That would be weak. We're also within the DOC spread, but rising shakeout. And of course, we have those positive extremes going back to the breakout move, which right about there, that would be the 44.33 from a dip standpoint. So overall, nothing too dramatic from that standpoint. I think that the market actually can build from where it is. What they're looking for is additional weakness that might justify a Fed softening its position a little bit. We look at it from the NQ standpoint, even softer from a reading standpoint, but you're still not getting a huge amount of short activity from that, and a much weaker DOC spread that's just developing at this particular stage. You just saw the ES was already at the 50%, so NASDAQ again still outperforming in general, but it's probably going to be a little bit of pullback within it, and I think that will be intraday until new buyers pop in and see opportunity to take advantage of weakness. And of course, treasuries, this was no shock. As everyone jumps into it, yield reduces, gets a little bit out of whack, and hold off until things dip back down, and that may attract some more interest in a little bit. But at this particular stage, you can see it's pretty strong weakness built into the setup at this particular stage. So I may be looking for a return back to normalization there. And with no change in the Fed at this particular stage, not a whole lot anyone's going to be able to do about it. We did see from a lot of the breakdown of the unemployment numbers and that there's a lot of regular full-time jobs lost, and most of it was foreign workers filling in on the part-time side that made it less disastrous, but it was a pretty significant decline. And I think that from a market standpoint would tend to be bullish, because it would suggest growing weakness, which would mean the Fed would have to slow or stop at least its momentum. But the Fed's always late on those situations, so it'll be a little while before that starts to grow. But I think that's just a background that has to be watched. And of course, this now with oil pushed into the new high range, it's going to continue to put pressure on the Fed that they're not going to be able to soften, even if the economy really begins to show cracks. They don't have much choice if they're going to maintain it. The only other alternative is to get oil prices down to reduce those pressures. No shock here from a euro standpoint, because as we get closer to that winter and with oil rising, that is just a killer for the EU in general, and the euro from a productivity standpoint as well. Just no relief in sight for that. So it's just going to be a question of how much can central banks push into there to support it, to keep it getting, because now you're within a penny of that danger zone, and that would be extremely problematic if it continues. From a gold standpoint, a little softening right here, but I would still expect gold to continue to make the move, particularly with oil, what it's doing. So I think it's just a respite until things start to push, and you're not seeing any support activity from cryptocurrency from a Bitcoin standpoint here, at least in the futures category. Significant danger of breaking new lows. It's already in a suspect spot as it is. Maybe just enough support from short-term buyers. If they break down though with that steel below the cyan here on the DOC, that's going to be even more problematic for them to hold up. So I think a lot will depend on how much strength we see in the overall market, because it just isn't really an impetus to want to jump into crypto at this particular, and it's just because there's just too much uncertainty at this particular stage, as far as what governments are going to be doing. And ETH doing better than Bitcoin from that viewpoint, even though it had a stronger negative in general. It full reset here from a short standpoint, so the potential for longs to take a bit of control in this is possible, except for when we look at that shakeup at minus 26. It's pretty steep, and you're looking at a potential here of a P2 pivot, but still below negative 13.5, that bottom line, and that makes it hard to suggest that there's going to be any significant rally that would be sustainable in the short run. From a intraday standpoint, you can see the little holiday right there. Not a whole lot happened, but we've just been floating up at that peak area. This is kind of a normal retrace. Again, when we look back, though, we've got positive extremes going all the way back here to the breakout point. And again, that would get us pretty close to where the daily positive extreme fill is, because obviously the breakout took place at the exact same time. So that's definitely, and you can see right now at this particular stage in pre-market, a little bit of strength from the short started off, but we can see a return back from a MBI Magenta pushing back up, and that's been enough to support it off the lows right there and push back up prior to market open. And when we go back to our intraday setups from before, we can see how that soft decline took place, cleared out any stops, tried to push back a little bit, but again, it's been fairly weak in the pre-market setup at this particular stage. We're starting to see the comeback here just before the U.S. pre-market opens up. So it's mostly just about clearing stops, getting rid of weak hands, and preparing for all that available new money that is going to have to be placed. And the question will be whether it goes to treasuries or if they're going to move it into equities. And I think that at this particular stage, I think that treasuries, you may see a split on it, and that would be a mediocre strength for the market without anything too dramatic. So unless it gets lopsided one direction, that would push equities down and treasuries yield down as well, and vice versa. If money goes into treasuries, then could see some softening of the market if there aren't any new buyers to fill in that void. But from a pre-market standpoint, it's making a decent move, getting back towards the even category. As always, though, take a look for me in the Skype chat. Trade well.